I'm going to spend, excuse me, just a very short period of time on my PowerPoint presentation today, and then the rest of the time we will spend on our live charts, going through several examples. Excuse me, sorry. Okay, let's get right into this. So a bit about us here at Trading Wins before we get into the presentation. We are a group of pro traders with well over 30 years of experience. We're real traders and real teachers, and we've been developing our own strategies and trading systems and teaching people around the globe from complete beginners to experts. Now in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here use on a daily basis. I'm also going to tell you exactly what you're going to need to trade the system, and then I'm going to show it to you step by step on my charts. I'm going to lay out exactly the rules for this strategy, and when we get to this point in the presentation, I will ask you to throw out a symbol or two of something you enjoy trading, or you might be in a trade right now. We'll bring up a chart, analyze it together, and see just how this system would have performed on that market. And then, of course, as long as we have time, we'll answer as many of your questions as we possibly can. A few poll questions before we get into this. How many, out of curiosity, how many of you have seen me present at an event or a webinar such as this before? Please make your selection or type into the chat a Y or an N. I really appreciate that. I'm just going to take a sip of water here. Hopefully I can stop coughing. Great, thank you very much for that. Pretty good mix. Just a couple more here. Which market do you trade most? Is it stocks, options, futures, or Forex? Again, please, if you can, take a second and type that in. I'd really appreciate that. Well, again, several options, futures, stocks, and options. Okay, great. I'm going to try to give you as many examples of each as I can today. And one last poll question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? Thanks, Marcus. I see Marcus has put in a little tip for me. He says a secret from Germany for a cold is a glass of warm beer. I'll try that right after this webinar. Thank you very much. I may need something during this webinar. All right, great. As you all know, trading can be extremely risky. So please educate yourself and please do not trade with real money until you are completely comfortable with the trading system you are using. Now, on that note, let me share with you how we try to limit our risk and exposure in the markets. These are our money management rules. Excuse me. Number one, I'm sure you've heard many times, but it is worth repeating. That is, do not trade with money you can't afford to lose. It is extremely important, but more importantly, what this is really about is trading with an amount that is small enough and it feels completely insignificant to you. You know, trading is so much more important, or so much more about how you manage a trade once you're in it than it is selecting the entry. Once you're in the trade, you need to be able to remain calm, think clearly, and follow your exit plan. And if you're worried about the money you have in that trade, you simply won't be able to do that. So please remember to always trade with an amount that is small enough that it feels completely insignificant to you. Also, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5% or even 2%. That way, you'll still have a very sizable trade on, but you'll limit your risk considerably. Also, you should never have more than 50% of your account balance active in the markets at any one time. The reason being, there are so many factors that are completely out of our control when it comes to the markets. And any major news event or an event such as 9/11, for example, can really drive the markets against you in a hurry. And so this will, number one, reduce the amount of loss you would have in such a situation, but number two, still leave you with half your account there that you can put back into the markets afterwards and make back such a loss. And with what I'm going to show you today, it really won't take you very long. Lastly, you should spread your trades out. You should always try to select the 1 or 2 best trades or the highest probability trades per time frame. We've seen a lot more volatility in the markets recently, and there have been days where the Dow, for example, has been up 200 or 300 points, and the very next day it completely reverses. So on a day where the market is up or down strongly, if you jump in and put in 4 or 5 trades at a time, and the very next day it goes against you, you're going to find yourself in a huge hole right off the bat. And that's exactly what you want to avoid with this rule. You want to spread your trades out and only enter 1 or 2 of the highest probability setups per time frame. A couple other sayings we follow. Number 1, you will never go broke taking profits, especially if you're just starting out. I want you to write this down and walk away with it. You know, over time, as you gain experience in the market, you will be able to remain in a trade a little longer each time and squeeze out more and more profit. But until you get there, get used to banking those profits. Also, remember that trading is never about whether you're right or wrong. That's important. But it is all about how much money you make when you're right versus how much money you lose when you're wrong. So, what will you need to trade this system? Well, just about any charting platform will do. We are going to be plotting 3 indicators on our charts. Firstly, the 20-period simple moving average. Then we're going to put on a very stripped-down version of the Ichimoku Kinkin-Hoi indicator. And lastly, the relative strength index, RSI indicator. Now, most of these are available on most charting platforms, so there's no need to go on and spend money on new hardware or complicated charting software. If you're watching this webinar, you already have everything you need. So a few benefits of this. Number 1, it will work on any market, stock, options, futures, Forex, globally, any time frame, any price level. And I'm going to show you examples, hopefully several examples of each. Also, you don't need a lot of experience. You're going to see just how quickly you can grasp this, okay, just how quickly and easily. Also, it has very clear entry and exit points. More importantly, it has very little risk, but most importantly, it is consistently profitable. We have been trading this for many years through all different types of market environments, and it has been very consistent for us. So, the strategy, again, has 3 components. Number 1, 20-period simple moving average. Now, we have tested this with weighted, with exponential moving averages, all kinds of different periods. What we found is the 20-period simple moving average works best. Secondly, again, a very stripped-down version of the Ichimoku Kinkin-Hoi indicator. Now, the Ichimoku indicator has been very popular overseas, over in Asia for many, many years, and has actually been used as a strategy in itself. Has become more and more popular in North America over the last several years, but we are going to be using it strictly for trend. I'll show you exactly how in just a moment. And lastly, the RSI indicator. So let me bring up my live charts and show you exactly how we do this. Okay? Now, hopefully you can see my thinkorswim chart here. And before I throw any indicators on, I want to give you a bit of a tip. One of the easiest things to do in trading, or one of the most helpful things to do before you start to trade, is always remove all the indicators from your screen and flip through your charts and make a list of charts that are trending very nicely, one way or the other. It is key. When you see something trending as nice and as smoothly as this, whether it's up or down, if we look at a trend lower, it works exactly the same way. The key here is that when you're trading with the trend, half your battle is already won. And when you're trading with momentum, it's even better. So how do we read momentum? Well, we read momentum by the slope in either the bars themselves here, okay, or in the slope of the 20-period moving average. That's where the 20-period moving average comes in. So let me throw on the indicators and start going through this setup with you. Okay, so here's a chart of Kruger. Now on this chart, we have, in light blue here, is the 20-period simple moving average. In yellow here and red is the stripped down version of the Ichimoku Kinkin-Hoi indicator. Now this is strictly the cloud portion. I'll show you how this would have looked if I put on the full indicator. Now, I also want to tell you that for this indicator, we'll use the default settings of 9 and 26 all the time. But what we do is remove the Tenkin, the Kijin, and the Chiku lines. And if we put those back on, I'll show you how this would look. Okay, there'd be a lot more lines on here. It's a lot messier. Now, there is a method to this madness. I'll touch on this a little more later on in the presentation. But for now, we're going to stick with just the cloud portion, and we're going to use that for trend only. Okay? So in other words, when the moving average and the bars are above the cloud, we'll consider that an uptrend. If they are both below the cloud, we'll consider that a downtrend. And if they're overlapping the cloud, then it's a period of consolidation, which we do not want to trade in. Okay? Now, lastly, down below is the RSI indicator, the Relative Strength Index. Now, normally this indicator is used to identify overbought and oversold conditions. And there's generally lines drawn at the 70 or 80 level at the top, or the 20 or 30 level at the bottom. We use it slightly differently. We remove those lines and we plot one line right down the middle at the 50 level. But also, on most charting platforms, the RSI would be set to a period of 14. Well, we prefer to use a much more responsive RSI, so we cut that in half. We use a 7-period RSI. Okay, so what you're seeing here is a 7-period RSI with a line right down the middle at the 50 level. Okay, so those are the three indicators. Now, how are we using them? Remember, we're looking for trend and momentum. So when we first pull up a chart, we can immediately tell what the trend is by whether the bars and the moving average are, either above the cloud the way they are now, which would be an uptrend, okay, or below for a downtrend. So we can quickly spot in a split second that we're in an uptrend here. Now, when we do that, how do we judge momentum? Again, it's by the slope of the moving average here, or the candles. But the reason why we like using the moving average is because during times like this, when the price pulls back, if we were judging it by the slope in the bars, we could easily mistake this for downward momentum. Instead, because the moving average remains in a slope higher, we know that this is nothing more than just a temporary pullback before a continuation of that trend. Okay? So once we have trend and momentum in our favor. In other words, we have the bars and the moving average clearly above the cloud, and we have a nice slope in that moving average. At that point, we turn our attention to the RSI. And for a long trade, what we're looking for is for the RSI to either come back and touch the 50 or go just below it, and then turn around and cross back above. And when we get that, it's that bar that becomes the setup bar right here. So this red bar here would be the setup bar. Let me highlight that for you. Right in here. Now, so that's the proper setup. For the trigger to get you in the trade, we're looking for a trade one tick above the absolute high of that bar, of that setup bar. Once you get that trade, you go long, and your stop would go just below the most recent low. Okay? Then it becomes just a matter of managing that trade. Now, there's one very important rule that you need to be aware of here. Once you do get that setup, should this stock trade below the low of this bar first, the trade would be disqualified or negated. That one rule will save you from most losses. In other words, most of the trades that wouldn't work out with this will not even be losses. They're just negated or disqualified trades. Okay? But if we get that trade above, we enter long, our stop goes just below the most recent low, and off it goes. Now, during a sustained trend, you're going to notice that typically we will have multiple opportunities to enter. So how do you handle that? If you're already in this trade and you get another setup such as this, how do you handle that? Well, if you're more of an aggressive trader, you can add to your position at each one of these new entries. If you're more conservative like me, well, you just maintain your original position and you use this as confirmation that you made the right decision and that you're in the right trade and you should remain in that trade. Let's go through an example to the short side. Again, one of the two things we're looking for right off the bat, we're looking for trend and momentum. How do we spot those? Trend. Well, once the bars and the moving average are below the cloud, that's our downtrend. Once our moving average has that slope lower, again, the more significant the better, we have momentum on our side. At that point, we turn our attention to the earth. We wait for a move either to the 50 or just above, and then once it's back below, that is our setup bar. Okay, in this case, right in here. So what are we waiting for to trigger us in? We're waiting for a trade just below the low of that setup bar. If we get it, we enter short, and our stop goes just above the high of the most recent high. Okay. Should this stock trade above the high of this setup bar first before trading below the low, this trade would be disqualified. Okay. And as you can see, when, excuse me, once you're in that trade, you no longer have to look at the RSI. It just becomes a matter of managing that trade. Okay? But if you're more aggressive, you can add to your position at every subsequent setup. Okay? Now, does it matter how far the RSI pulls up above the 50 line or not? It really doesn't. What matters is that at the time that you do get that setup bar, what matters is that the slope in the 20 has been maintained. In other words, if this pulls back too far, the moving average will start to flatten out and turn over. And if it does that, it means we've lost momentum and you no longer want to take that trade. Okay? But once you get that setup bar, if that slope lower is still intact on that 20-period moving average, then you do want to take that trade. Okay? Let's go through a few more examples here. Here's a chart of TLT, which is the ETF for the 20-year Treasury bond. Well, again, what are we looking for? We're looking for trend and momentum. So once we have it, you can see down here Once we have the bars and the moving average clearly on one side of the cloud, and we have a slope in that 20, and we turn our attention to the RSI. And as soon as we get that dip below the 50 line and back above, that's our setup. So you can see there were several. There was one here, okay? And back over here, this pullback, we got a nice one here, which led to a great move. Now, there's one thing that I haven't talked about, and that's what we call a double dip. You'll notice that here, the RSI came right back to that 50 line and touched it and moved forward again. That's all you need. That's a proper setup right here. Okay? But sometimes you'll get what we call a double dip. In other words, as soon as you get in, it'll pull back and it'll do another dip on that RSI 50 line and then back above. Well, that double dip is actually a very good thing. For long trades, it'll look like a W pattern. And for short trades, it'll look like the letter M. But these are some of the strongest setups. And you can tell from here, once we were triggered in on the second move, look what happened to the stock. These are typically some of your best and strongest setups. So keep an eye out for those. The other thing you want to keep an eye out for is for the slope of that 20-period moving average from going from one side of the cloud to the other. In other words, when it crosses the cloud with that slope in place, that typically means that this move is going to last for a while. It is going to be a sustained trend, which typically leads to multiple entries along the way. Okay, let's look at a few other examples here. Here's a chart of GMCR. Again, all we're looking for is trend and momentum. And once we have that in place, we're looking for these pullbacks on the RSI and our possible entries. Now, see right here? Look at that slope moving from above to below that cloud. Okay? It's very significant, which tells us that we're about to get a sustained move lower, which in fact did happen here. So once we were on this side of the cloud, and we did have momentum on our side. So we turn our attention to the RSI, wait for that move above and back below the 50 line, and there's your entry. Now, look at all these dips. There was one here. Let me draw these out for you. There was one in here. There was one in here. One in here. Okay? We can look at all of these. All of them would have made you money. Now, is every trade going to be a winner? No, absolutely not. There will be the times where you get stopped out. But I can tell you from using this over many, many years, the majority of the trades excuse me, will be winning trades. And especially if you add the rules, if you follow the rules that we've added to this, meaning once you have that setup bar, you need to wait for that trade below the low first. And if it trades above the high first, well, then you disqualify that setup, because that will remove a lot of the losing trades. And now, when it pulls back too far and you see the moving average flatten out, such as it here, you would, okay, do not take that trade. Now, even though this one worked out really well, trust me, you want to ignore those trades. You only want to trade with momentum. Here's a chart of UNH. Same thing. What this is doing is it's making trading easy for you. It's helping you pick out the easy trades, the trades that are most likely to go in your favor. Why? Because you're trading with trend and momentum. Here, the bars and the moving average clearly above the cloud, and clearly we had a nice slope. So what do? We wait for that dip on the RSI, and you can see here, the dip was pretty substantial. But when it crossed back above, you can see that the slope on that 20 was still fully intact, which is why we do want to take that trade. Okay, and you can see whether you entered in this location over here. Here's another double dip right in here. Okay. Here's that double dip, that W pattern. Okay. What resulted from here? Boom, nice move higher. That's exactly what you want to see. Okay. Does it work on futures? Here's crude oil. Now, we all know just how badly crude was beaten up last year. But when it first started, we didn't know how badly it was going to happen. But you can see, look at that slope of that 20 coming through that cloud. We knew, based on this, that it was going to last a while. We just didn't know how long. But once we're through that cloud, simple, what do we look for? Turn our attention to the RSI and wait for those moves above and back below. And there were several. Okay? Here was a double dip right in here. Let me draw it out for you. Right in here. Okay? So this was the kickoff. Here's the setup bar for that second dip. Okay? That's what triggered it. Stop go just above the most recent high, and off it goes. And then there was another dip here. Okay, another entry here, and another entry here. Okay? No matter which one you took, would have resulted in a huge winning trade. And if you added to your position along the way, you would have done even better. Okay, there was another entry here. Right? So now, how easy would this be to manage? Okay, that's why, again, you want to look for charts that are trending very nicely. Okay? It just makes it so much easier, so much easier. Now here, currently, it's looking like it's putting in another double dip. Okay? The only problem is the moving average has almost flattened out, so not much momentum on our side. Here's a chart of the Euro futures. Okay? Again, very simple. You wait for that trend and that momentum on your side. Once you have it, you look for the RSI to move above, back below. There's your entry right in here, and off it goes. Okay? And there were several more through this area, and boom, off it goes. And you see here when you get this move, here's your entry. Once you get that trade below the low, right? There it goes. So how easy would that be to manage? Not very difficult at all. That's what this is doing. All this is doing is putting the odds, excuse me, in your favor, which is what really matters. For you Forex traders, nothing changes. Settings remain the same. Indicators remain the same. It's just a matter of identifying what the current trend is. In this case, we're below the cloud. We're in a downtrend. Do we have momentum on our side, or do we have slope? Yes. So we look for the RSI to move above, back below, which happens right in here. There's your entry, right in here. This is your entry, and off it goes. It pulls back again, only this time, pulled back too far. We lost momentum, so we give it up. But here, regain momentum. There's another opportunity to go short. Okay, it's that simple. Here's a chart of the British pound, US dollar. Same thing, no different, very easy to read, very clear entry points. All we're doing is waiting for that RSI. Here's a nice double dip right in here. Okay, right in here. This is the area. What happened after that? Boom, not only moves in your favor, but it keeps going. Okay, subsequent dips here and here, you could add to your position or just maintain your original position. Very nice. At this point, I noticed there's a number of questions, and I'd like to open up the floor where you can throw out a symbol or two. I'm going to ask our coaching coordinator, Raul, to come in and help me out. he'll be able to read off the questions and the symbols. That way I can just pay attention to the chart, and we can get through even more of them. So Raul?
Vince, thanks so much for having me on with you today. I really think you got to spend less time with Reed in Las Vegas at the casinos.
Yeah, I know.
With all that smoke and everything.
Yeah, that's where this all started.
It did, didn't it? I blame Reed for all this.
I always blame Reed no matter what.
That's a pretty good go-to. Yeah, I don't blame you.
All right, let's start with Mel, who wants to know about DRV.
DRV, sure. Let's have a look. So DRV, this is a triple leveraged ETF for the real estate market. And you can see, again, it really doesn't matter whether it's an ETF, a futures contract, a currency pair, a stock. It really doesn't matter. What matters is that you can quickly spot the trend and the momentum. Over here, well, even if we look back here, we were clearly in a downtrend. We were below that cloud. And we clearly had a slope lower. Once we get that pullback on the RSI and that move back below the 50 line, there's your entry, and off it goes. When it pulls back too far and the moving average flattens out, you ignore that. You be patient. Now look at this here. Look at this move from one side of the cloud to the other. Very, very sharp momentum. That tells us this is going to last a while. And so all we do is keep an eye out for these dips, and especially these double dips here on the RSI, because those are some of the strongest setups. And again, look what happened right afterwards. Boom. That's exactly what you want to see. So right now, we've gone back through this cloud with some momentum. We've pulled back, and it looks like we're in the midst of putting in a double dip again. This was the first one, and now we're dipping again. So we may have another entry here very, very soon. So this is a good one to keep on your watch list.
I've got three. Kelly, Diana, and Mark asking about Costco.
Costco, sure. So here's a chart of Costco now. Many people say, it's easy. Hindsight's 20/20. You can easily look back and find stuff, where it's set up and so on. But how easy is it to spot, when you're looking at it in real time? Well, right here, can you quickly tell me whether this is in an uptrend or downtrend, and whether or not we have momentum on our side? It should only take you a split second to do that. You can see it is. So what do? We wait for to move above and then back below the RSI for an entry. So that's what we have to wait for. Now, there's earnings here coming up, I think, tomorrow on this. Well, it's the 28th. So you might want to wait until after earnings for that. But again, if we look back at Costco, here, there were several entries. Anywhere along this point here, you can see we had slope in our favor, we had trend in our favor through this whole time. Any of these dips in here, okay, would have got you in and would have worked out very well. Okay, look at the move afterwards. All right, that's exactly what you're looking for.
Other than symbols, we've had lots of questions. I will try to get to as many as I can. CJ was asking about SWKS, and
Sure.
A lot of people were asking, does this work on different time frames? So can we do SWKS on a smaller time frame?
Sure. So first of all, here it is on a daily time frame. And again, it works very well. There were entries here, here, and here. But let's move this down to, say, a 1 hour. Excuse me. It's the same concept. Nothing changes. What you need is that momentum and that trend in your favor. Now here, we didn't have a lot of momentum, but if I throw on more history on this chart, let's go to 90 days, 1 hour. Here, let's see if it gives us any. Right here, there was an entry. Right in here, you can see this area right here. See how it came back to that 50 line and back below right in there? That was right in here. Okay. So the time frame really doesn't matter. I don't know how well this would do on a 15-minute on this chart. This chart not very well. But I know many of our members use this on the S&P E-mini futures on a 5-minute and a 15-minute. I prefer the 15 and the hourly for intraday time frames, and then the daily and the weekly for longer term.
We've done stocks. Forex, it works as well. Salim was asking about USD CAD.
Sure. Let's have a look at USD CAD. Let me go back. Well, first of all, if you want to look at a 15-minute chart, right in here, you can see that. I'll zoom in for you. Right here was a very nice entry. You can see that right here. Boom, just took off. Okay. Let's go to the daily. And again, same thing. Anywhere in this area, this dip right here, this dip here, over here, any one of these would have not only gotten you in, but would have been very profitable. Works very well.
We've got about 10 minutes to go. I know you've got some more to talk about in your presentation. We'll come back and answer more questions.
Okay, let me just summarize. Let me bring up my presentation again and just recap what we've gone through. So what I've shown you so far is a system that, as you've seen, will work on any market. Stock options, futures, Forex, any time frame, any price level. Again, we've traded this with $2 and $3 stocks. We've traded it with the Googles and Amazons of the world. You've seen just how easy it is to spot on a chart. And it is very consistent and strong enough to be used as a standalone system, but it can also be a great complement to whatever you're trading with now. You saw also that when it does trigger, it tends to move in your favor immediately. And even better, the majority of trades that don't work out are not losers, they're just negated trades. Now, as Rose said, I see there's a number of questions, and I'll try to answer as many as we can. But before that, let me tell you about a pro class we have coming up on this coming Friday, actually, 1 p.m. Eastern. The class is set for 2 hours. I'll be teaching the class. Hopefully, my voice will be a lot better by then. The class will be recorded if you can't attend. But during this class, I'm going to show you the full system from entry to exit, including 5 different exit strategies. But we'll focus on the one exit strategy that myself and the other traders here use on a regular basis. I'm also going to show you a very unique way of adding support and resistance to this that will really increase the accuracy of this. Now, you've seen just how accurate it can be, but on a night where you have several trade setups and you want to select the 1 or 2 highest probability ones, well, that's where this is really going to help make the difference for you. I'm also going to teach you 2 Fibonacci tools. One that will help you confirm your entry, and the other will help you set targets for your exits. I'm also going to show you how we trade this with options. During the class, I'll tell you what kind of expiration to look for, what kind of delta, and when to buy a call or a put versus a credit spread, all of that. Also, one of the most popular parts of this class is near the end. We will do a full search together for trade setting up that coming week. So I'll share my watch list with you. We'll flip through dozens of charts, and we'll select trades that are ready to go right then, so we can all walk away and put on a few trades after the class. As a bonus, I'm going to teach you, throw in another segment that we usually trade or teach as a whole separate class. It's a full course on the Ichimoku Kinkan Hoi indicator. Teach you how to use that as a strategy in itself. All of this you can get at tradingwins.com/move. But before you order, let me tell you exactly what you're going to get so you know that it's right for you. As soon as you order, you will get a recording of the previous pro class we did. And so you can watch it right away and start using this right away. But regardless, we'll save you a seat to the live class on Friday. And as a real bonus, we will send you or give you 30-day membership to our pro service. Let me tell you a bit about that, because it's really the best part. Our pro service is the most powerful way to get access to all our systems. This is just one of them. But you're also going to get real-time trade alerts showing you entries, the stops, and the targets for all of those. You're also going to get premium nightly videos. We send these out Sundays to Thursday, and they'll teach you how to trade the various systems that we have. And you're also going to get access to a members-only weekly chat, which happens every Thursday. The next one is tomorrow morning, 10 a.m. You'll be able to come into our room and ask me any trading-related question you like. In addition to that, you can access our library of past educational sessions, and you can always re-attend any pro webinar you take with us as many times as you like for free. So all of that together is a value of $988. But for any of you on this webinar today, all we're asking for is $97. We'd really like to give you a chance to see what we do here at Trading Wins. Now, unfortunately, we do have to limit the class to 25 people. We generally get a lot of questions, and the whole goal for that class is to answer all your questions so that you can walk away from that class trading this completely on your own. The recording you're going to get of the previous class is almost 3 hours in length. The promise I'll make to you is I will stay as long as I need to at that class to answer every single one of your questions, okay?